I'm going to be talking about Broadcom. It's actually really a conglomerate of a bunch of different tech companies. And I normally don't invest in tech companies. I find it unstable, and during a recession or in hard economic times, they really take a beating. Um, but this is actually the hardware side of like smartphones. Um, even enterprise storage, for businesses and large firms. So these are things that people are still going to have during a recession. So I think this is about as recession proof as you can get. So it's as stable as you can get. And they have a huge moat. They're extremely diverse within the tech field. I mean, basically, if you buy this, I would call you diversified across tech. And this is one of my favorite dividend growth stocks, especially in this sector. So Broadcom is basically they sell semiconductors, they sell radio frequency filters that are found in like the Apple iPhone, and Galaxy and all the phones. So like if you're an Apple user, a Samsung user, I'm invested in you uh, either way with Broadcom. So if you were to only invest in Apple or only invest in Samsung or Microsoft, you're only investing in one type of brand. With this, it goes across all smartphones. So you're investing in smartphones with this. That's how I view it. So I really like Broadcom. The only negative is that I view it as a little bit overpriced right now, and it's $300. So it's a little steep per share. I mean, I know that really doesn't make a difference. It still has a 3% dividend yield. Um, but it's just if you have a smaller portfolio, like under $5,000, then buying this, might limit your diversity. You might have, if you only have $1,000 and you buy Broadcom, then you're putting 30%, into tech, which is not ideal. So we'll go ahead and look at their charts, and then I'll show you about some news about them, and I'll show you them in my portfolio, and we'll call it a day. So their payout ratio is 50%. That's perfect, especially for tech. They have more than enough. They have more than enough money to invest back in their company to acquire new businesses. Um, they've had a dividend growth of 8 years, but they're a relatively new company paying dividends. So that's not to worry. We can look at their dividend growth here. It's perfect in my opinion. It just steady up as usual. Yep. Wow, they increased it by almost $1.50. That's pretty good. Now we'll look at the dividend yield. So what we're looking at here, remember guys, is a relatively high dividend yield, which equals a cheap stock price. So you can see for the longest time, they were, only at about 1.3% on average, and now they're up at almost 4%. So they've increased their shareholder dividends quite a bit the last 2 years. Okay. I also think the stock is relatively cheap right now. Okay. So I am going to be picking up a lot of these. And even if it's not, necessarily cheap, I highly, highly doubt it's going to go any cheaper, right? So it might stay at around this price point at around $315. But that's fine because it's paying me, 3% every year, and I'm okay with that return. I'm okay with that cash flow. So if it remains at 300 or it goes up in price to reduce this dividend yield a little bit, I'm happy either way. So we can go ahead and look at the advanced chart here, the in the moment chart, if you're going to buy it and pick it up for just a couple months. I would say right now is a good opportunity. I think that, so we had a little dip here. We lost some momentum, in the short term. MACD is still above the red. If you guys want to know more about interpreting these, go watch one of my other videos. I have one on interpreting indicators. So yeah, we have a little bit of lost momentum in the short term here. MACD is still above the red, so it's still, I mean, it would be better if you were down here and you would be up here now, but we're still in the green. I'm gonna pick up more because I see this as just a little sell-off signal, so we're a little cheap right now, and I think it's gonna actually keep going up at its all-time high, but I think it's just gonna keep going up. I really like AVGO, and with the new iPhones this Christmas and stuff, this is one of the stocks that actually don't take a dip. These go up, during the winter, during the busy season. So here I just wanted to show you this quick article, so this is like the dividend growth investment of the future. They're putting a lot into R&D. They're coming out with new chips. They put the chips inside quite a bit of enterprise technology, across businesses. They put, radio and Bluetooth and stuff like that into the iPhone and the Samsungs. They just have such a large moat from B2B, B2C, everywhere in between. They have such a large moat. So I actually don't have AVGO in my Robinhood. I just don't have enough money in here to really, buy a couple shares of it yet. I am up this past week. It's looking good. That's about all the news here. I've just been slowly buying and selling a few things. I don't even remember what I didn't really buy or sell much. I give you a quick preview of AbbVie here. I mean, they're just on fire. My $90, total return. That's awesome. That's all I can say. That's awesome. On $350, I made $90. M1 Finance. So here's where I have Broadcom. They're comprised of my tech sector, and they have 50%. So Seagate and Cisco. Cisco is kind of business network solutions. Seagate makes hard drives for all types of applications. They even make memory in the iPhone and stuff. So again, you would expect in my tech section you'd see Apple or Microsoft or one of the software companies. Those are extremely hard to value. They are up and down like crazy. I don't think they're a reliable investment for the long term. However, AVGO, Seagate, Cisco, like these are all companies that have been around for a while, and they make the hardware that all of these iPhone and phone makers use and require. I used to have LG Display on here, which made all the displays, for the iPhone and stuff, but they had some management issues, and I would highly recommend not buying LG Display right now. I think they're actually going to go under. So I jumped out of there. I had them on Robinhood actually. So yeah, besides that, it's pretty much all I had to show you guys. Check out AVGO, one of my favorite dividend growth stocks for the future, for what we're going to see in tech. And it's a big market, and if you're not in tech, you need to get in tech, and this is the safest way, if you will, that I know how. So I'll see you guys in the next video with a portfolio update. I'll take you guys on an in-depth tour of both my portfolios. Have a good one.